Hello and welcome back to another episode of Real Estate Renovators, the business advisory show for real estate professionals. I'm Chanell, this is Rex.
How are you, Chanell?
I'm good. I'm not going to lie, I'm a little bit tired now. I don't know if our viewers know, but we actually film about 10 episodes in a day.
It's not 10.
Well, it feels like 10. And we just had a break for lunch and I have overdosed on the beautiful Japanese. What did we get? Japanese?
Vietnamese. I think it was more the alcohol than anything else.
And I have had 2 champagne today. So I'm at that stage of the day where I'm like feeling full, but also feeling it feels like after Christmas lunch, you're full and you're festive, but there's not much left in the tank.
Well, we've got more episodes.
How are you, Rexy?
I'm well. I'm not as bad as you. I'm excited about today's episode. Well, the next episode, the episode. A lot of people may or may not know our next guest. He's one of the best mortgage brokers in Australia, with his company being one of the largest in Australia as well. And I thought it'd be great to get Nick Reilly from Inovayt to come on board, to come on the show, to talk about how mortgage brokers and real estate agents should really work together. And I feel like a lot of our real estate agents, a lot of clients I see, don't have a mortgage broking arm. So I thought we can delve into the benefits of having this partnership. So Nick, welcome aboard.
Thank you. Thanks for having me. Happy to be here. Excited to be here.
Oh, excellent.
Especially when I saw all the champagne glasses. I'm like, how good's this?
That was all her.
Come to the right place.
Lipstick on all of them too. Tell us about yourself, Nick.
So we're a financial services business. So traditionally we were a mortgage broking business and have branched out into financial planning. We have 40 staff across the country, predominantly working with real estate agents as far as mortgages go. We've always seen our business as a really good partner for real estate agents. We do a few things that make sure we are a good partner. So
I want to delve into that because I work for a lot of real estate agents as well, and I feel like a lot of them don't understand the benefits of a partnership with a mortgage broker. So can you talk to us, not from a financial point of view, but from a client contact point of view as well?
Yeah, and I think traditionally it's been all about the financial point of view, and that is a problem. But the reality is a good finance relationship should help the real estate agent sell more property. And there's far more money in a property commission than there is in a finance commission. So for us, it's always about how do we help your process, whether that's with a vendor or a purchaser. And it's not the 30 access to 30 lenders, making sure your purchaser can get the max loan amount. For me, it's more about making sure the purchaser is qualified and making sure that they are taking an offer to a vendor that is a real offer. It's about assisting the listing process.
Just stopping on that, if an agent knows that the purchase qualified, that will add so much more value to them. And I think that's where it's missing, where they don't realise working closely with someone, they might get this information.
Particularly in the current environment, because it is not as easy as it was to get money. Interest rates moving around means people's serviceability changes. So one of the problems at the moment is a pre-approval now might not be a pre-approval if we get a rate rise. So understanding the purchaser's position, vendors are nervous at the moment, so having a qualified buyer and a contract that's secure is huge for a real estate agent.
And the other ways you help it?
Vendors, particularly in the Melbourne market where auction is most of the sales, and most agents don't think about this, but if you have a vendor that wants to list a property, they generally want to upgrade in most cases, and they've generally found that property before they go to the real estate agent. So we actually become part of the listing process. So if vendor A needs to buy property B, can they do that if their house sells for, say, $900,000 or $1 million? Or what if the house didn't sell for that and sold for $800,000? Would they still be able to transact on that next property? So with the agents we work well with, we actually become part of the listing process. Gives the vendor comfort that they can take on the next transaction. So makes the listing easier for the agent. Most agents don't think about that. They think about the purchaser.
They really don't, yeah.
But you look at where their money is really driven from, it's from listing and getting vendors on.
Or they don't think what the vendor is going to be doing necessarily with the money.
Correctly.
An extra person in the room.
Yeah, that's exactly right. So when we talk to agents about that, they sort of get that aha moment. They go, oh, that makes sense. And the agents that do get it were involved in a lot of the listing a lot of the listings.
Well, I actually just had that aha moment right then because I was like, that makes so much sense.
Yeah.
Why do you think a lot of agents aren't partnering with mortgage brokers? Like, where's the disconnect there?
Whereas I think it's an education piece, and as I said at the start, traditionally it's been about money and the mortgage broker, real estate. It's how much money will you pay us, what percentage of the commission will you pay us. So I think a lot of the times maybe the experience isn't that great, so they don't see the value. For us, we know we've got a real estate agent once we do their own personal stuff, and that generally comes pretty quickly. So once you look after a real estate agent personally, straight away you start to get all their clients. So I think it's an education piece. Maybe they don't get the experience that they were
I
expecting.
think it's the brokers as well. A lot of brokers, smaller brokers don't have that experience to be thinking even on a broker. They don't have that aha moment. And the agents don't. So.
Yeah, and you need a solution. Our business is a finance solution. And look, it's no secret that a lot of real estate groups try to do finance themselves over the last 10, 15 years.
They see their wealth in it.
They did. They don't so much anymore.
The connection as well.
Well, the connection is huge, and I'll talk about that in a minute. But I think as it got harder, real estate agents or groups worked out, well, this is hard, and a lot of them have moved away from finance. So for us, we come at it with a whole solution. So it's not just about purchases and getting purchases finances approved. It's about communication back to the real estate agents. Remuneration is in there, and for a lot of real estate groups, it's about remunerating their staff. How can we help them remunerate property managers, not just real estate agents?
How do you remunerate property managers?
Same. Well, there's a commission rebate, but again, talking about clients outside of purchasers, like landlords and tenants, for example. There's a big problem with landlords at the moment. If they've got 2 or 3 properties, they're holding a lot of debt. The interest rate rises. Most of them had double. If they're paying interest only, their repayments have doubled. So they're under stress. And who's dealing with that? It's generally the property managers, because they have the conversation. So, what are you doing as a real estate group to offer your landlords a solution around finance and making sure they're on the best, not just rate, but best terms possible?
And that builds that relationship. It
100%.
finishes it.
And they need to keep those landlords, because that generally provides a sale for the real estate agent at some stage. So the groups that we work really well with, we do get finance referrals from the property managers, and the real estate principal, for them, that's a way to give their property managers bonuses when maybe they were capped at 70K a year or whatever the income might be.
She keeps pushing them up.
Yeah, well,
very common
could be 80 or 90K now. So it's just finding a whole solution, not just, hey, send us your purchases when they can't get finance. It's how do we actually add value, not just to to all of your stakeholders, so not just your clients, but also your employees as well.
What's happening on the market right now, Nick? Obviously, like you touched on rising interest rates, a lot of pressure on your average landlord, purchaser. Talk us through what is the market doing right now?
So some trends that we're seeing a lot of pre-approvals. So strange as it sounds, a lot of people want to get into the market, and I think it's the media and the RBA is now suggesting that the rates have nearly peaked. We didn't expect to get the recent rate rise that we did. But now that people know the rates are close to peaking, they're confident that, okay, that's going to be my repayment. I can factor that into my budget, and I know that's where it's going to end. I think what's happened the last 2 years is people haven't known where that ceiling is.
Yeah.
So we're seeing a lot of people want to get into the market and are getting ready. I think 30% of our lodgements last month to the bank were pre-approvals. So we're finding most dual income families have still got serviceability. They're still eating out. They're still going on holidays. So they've got levers to pull to make mortgage payments. So a lot of people want to get into the market now that they think that the rates are peaked. We're seeing that.
And prices seem to be going up still too.
Well, yeah. As soon as the RBA paused the rates, the prices started to go up.
Do you think it's a good time to buy? Would you advise that it's a good time to buy if someone asked you that question?
Definitely. If it's time for you, and this might sound cliche, but you cannot pick the bottom of the market.
Yeah.
I think, is it right for you? Well, that depends on your own budget and your own cash flow. So if you're ready to make a decision to buy and that repayment fits into your budget and you've built in a little bit of stress on that payment, another 1 or 2 rises, then if it's the right decision and the right time, then do it.
That should be a long-term plan. I don't think anyone should be buying property for short-term investment.
Well, no. If you look at what the market does over time, if you hold it for 10 years, you pretty much can't lose unless you buy the wrong asset.
There's not many builds going up anymore, and demand's always going to be there and going higher.
Yeah. Other trend is obviously the mortgage cliff that's coming, or the fixed rate cliff. We haven't seen that yet, but is coming. We're getting phone calls from clients that are close to their rate.
Because you hear different stories about being April, being May, being June. It keeps getting pushed back, this cliff.
It's mid-year.
What is this cliff? Can I ask? What are we talking about? Well, when fixed rates are going to end and it goes to variable, that's what it is?
Yeah,
okay.
So during COVID, people were fixing in at 1.9 or 2.1.
Yeah.
So if they're coming out of that repayment now, they're going into an interest rate of sort of 5.5, and the repayment won't double because a chunk of their repayment was principal, but it's a significant difference. So people are starting to ring, even if their fixed rate finishes in November, they're calling and they're getting ready, which is great because we need people to be doing that to get prepared.
Yeah.
So we're seeing a lot of that, and the pressure on landlords. We're seeing landlords with 2 or 3 properties under severe pressure, and there's media around the rent increases, but you might have had a $20 a week or a $30 a week increase in your rent income. That does nothing to double, to offset the double the double interest.
Yeah.
And the other thing is compliance, smoke detectors, all these things that landlords are paying for now. So a lot of pressure on landlords, and a lot of them have made money over the last 10 years, so they're exiting. That's probably the other thing we're seeing a lot.
As in getting out of the market, or
getting out of the market? Yeah.
So do you predict that in the next couple of months when this cliff occurs, the real estate market's going to go wild because there's going to be so many properties for sale? And then obviously that will sort of even up what's happening in an inflated market, or am I a little bit naive in saying that?
No, you're not naive because it makes sense.
Yeah.
But I don't see it happening. Based on the level of inquiry that we have, I think immigration is another thing. We've got a lot of skilled labour coming in.
Can I ask, Nick, is that due to China have now made it that you cannot do university by correspondence? So in order to get an Australian degree, you have to now, if you are from China, you have to study in Australia. So that's why we're seeing drones of Chinese immigrants coming forward to Australia.
I think you're talking about more skilled migrants. They've opened up the floodgates when during COVID there was no migration. So now they're getting
just
every
in
profession.
general.
The labour shortage is now being filled up.
Labour shortage, wages. Okay. They need skilled workers behind on infrastructure projects. So they've opened the floodgates basically to let people in.
And they all need a place to live.
They all need a place to live.
Rental crisis and property price.
Yeah.
And people that come to our country, they want to own property, and they generally make that their number one focus. Couple that with what's obviously happening in the building industry. A lot of development projects don't make sense. Big land subdivisions are not really selling. So there's going to be an undersupply of property, and it's going to come really quick. So I don't see the values being impacted at all.
No. Interesting. And we talk a lot, Nick, about where average salary now in comparison to average property price makes it almost impossible for someone young coming into the market that's seeking to buy a property. With your pre-approval process, realistically, if you're on average Australian income, is it possible to buy a home now?
I think it is. And I think there's, not to sound, I don't want to make this come out the wrong way, I don't want this to come out the wrong way, but I think there's a bigger gap between the haves and the have-nots. And I suggest a have now being anyone who's got a dual income family, and I mentioned that before. Most trades now are earning 6 figures plus.
Yeah.
Most professionals are earning 6 figures plus. 150, 180 is not crazy for a professional, and then low ones for a trade is just normal most. So you've got combined income of sort of 300 to 400,000. That's not strange anymore. So there's plenty of serviceability or plenty of room for repayments. And I talk about the restaurant thing. Most good restaurants, you got to book packed, right?
Yeah.
Unless you just walk in.
Well, or unless you want to eat at 9 o'clock at night, or 4:30 or something. So people still have money.
Can I ask, Nick? Sorry to cut you off here. It's an age-old question.
Yes.
When anyone's arguing with their parents right now, I do, when they say the interest rates when I was buying a home, Chanell, were 10 times what you are, and I'm arguing, well, the average salary then, and this age-old argument.
Yeah.
So realistically, if I bought a house 30 years ago, am I in a better position now, or were my parents in a better position when the interest rates were? What were they back then?
They were quite high. It depends
what was
which
it? It peaked in the 90s.
Oh, 18s, I think is what I hear.
Yeah.
And
But they're saying now with the average salary being higher, it doesn't matter where. You know what I'm saying? So
I think it's the price to property value. So the average income to the property value. So back then it was like a 3 multiple. Yeah. Now it's a lot higher. But if you look at the dual income, if it's $400,000, the average property price is what, $750,000, $800,000.
And correct. And then
the average property is $750,000, $800,000.
I think that's what the medium is. It's the medium in Melbourne, I believe.
Well, if you look at the mortgage belt, which is sort of the outskirts of Melbourne, I'm just thinking about house and land packages, whereas a lot of where first homeowners go now, 600,000, 700,000, 800,000. You know, so. But to answer your question, I think, and you're right. Like it's like some people are paying 50% of their salary into their mortgage, but the issue at the moment is it's not, and it's been the issue for a while. It's not so much serviceability; it's getting the capital for a deposit. So most people can service a debt. It's okay, if I want to spend $800,000, I really need 10% or up to $100,000 deposit. Now, people can pay debts really easy, but saving is difficult, you know, for obvious reasons, because there's not a payment you have to make. So we find the issue being capital and saving the deposit. Not so much the serviceability of the debt.
But you see a lot of change in the marketplace where parents providing guarantees and there's certain groups, even governments, giving deposit
schemes, first home buyer schemes, like house and land package schemes.
Look, and the first homeowner stuff helps, but it's not a game changer.
It keeps changing as well.
Yeah, and the issue, if you want to do that, you generally have to buy brand new. So you're doing house and land. Not everyone wants to do that. The guarantor option is fantastic. Not only does it get people into properties quicker, but it eliminates, in most cases, mortgage insurance, which is around 3% of the loan amount. So someone's borrowing $800,000, that's $24,000 saving. So once you show someone's parents that they can save them $24,000 by going guarantor, they generally all say yes. You know,
but they take on the risk as well.
They do, but it's a lot better than it used to be. So now it's a limited guarantee, so it's actually documented. You would know this, that it's only 20%. Whereas before there was no black and white, it was all in together. So, and most parents want to help, but they might not have that $100,000 in cash or in capital or liquid funds. So the minute they find out they can do the guarantor option, most parents are pretty happy to do it.
Not European parents, tell you that much. We've got your first car, we put you through education, everything else is on your own now.
Well, most European kids get given a property in a good suburb anyway.
I missed that, though. What about you, Rexy? Did you get your first property by your parents?
I did.
Oh, you did?
I got the deposit payment. And I got my first car too. Can I go somewhere else for a second? You also have a financial planning practice and risk insurance. And the reason I want to bring up risk insurance, we work with a lot of real estate agencies in setting up their partnership agreements and shareholders agreements. And we always raise a buy-sell arrangement, whereby if one person dies or becomes disabled, you should have an insurance policy to come in and pay. So you can pay out the estate effectively. You can assist with this. And I know you and I have spoken off camera about this. But
we do a lot of this stuff, not just with agents, with any businesses. But one of the common things, and you would know this, people go to a solicitor and get a buy-sell agreement, which stipulates, if someone passes away or has a TPD incident, that a certain amount of money will pass to the other director or the other shareholders, and a dependent will get that revenue or that share sale. But people don't get the insurance to actually pay for it.
Or the insurance costs too much. That's what I find a lot, where they go get a quote for $60,000, $80,000 per annum to cover it. And the coverage is so broad that it can be reduced potentially, I find. Yeah,
correct. And it shouldn't, if you're looking at a 40-year-old agent, male or female, you should be able to get $1 million of cover, like life and TPD, for a couple of $1,000 a year, really.
Some of the quotes I've seen.
Yeah, correct. Because most insurance providers or advisors will go the ultimate, level premiums, and I won't go into insurance too much, but will load the premiums up with every bell and whistle, which may or may not be needed. The other thing to think about is if you've got that cover attached to your buy-sell, which is an absolute must, because if it's a $10 million business and if one agent passes away, the other one agrees to pay $5 million, well, what agent has $5 million in liquid funds ready to go?
Even if they refinance it, if one of the partners passes away, the business may not be worth $10 million, but the sales may not still be the same levels. And then you're buying something for an agreed value where you're funding it, and you're going to go backwards really quickly.
And quite often they don't have the money. And who gets impacted? it's the dependent of the person that's passed away that gets impacted, because as a business owner, you think all your wealth is generally tied up in your business. Now you need to make sure that that wealth can be realised for your family if something happens to you, and quite often it can't. They go back to the shareholder agreement. Okay, well, it's $2 million and that passes to the partner. Where does the $2 million come from? You know, and it's generally not available. So we're big on, if you get your buy-sell agreement, at least have a look at the insurance. And the other,
have to go hand in hand. Without insurance, you shouldn't have a buy-sell agreement.
It's pointless, right? Yeah. The other one that should go with the buy-sell is the key man insurance. So, and again, it's not that expensive. So if you take a...
Can you give a brief description of what a key man insurance is? Because some people may not have it or understand it.
Yeah, so hypothetically, the key income rider, which I'm just thinking about normal real estate businesses, you've probably got 2 or 3 directors generating 80% of the revenue with people around them supporting them. If you take a $1 million GCI agent out of that business, there's $1 million gone. Now, you can replace that, but it will take a long time. So hypothetically, if that agent is sick, and it might be something they're going to recover from, but they're out of the business for 12 months, if they were to pass away, or if they had a TPD incident where they're never coming back to work, key man will give that business an agreed amount of income to compensate for that individual not being in the business.
For how long?
It's a lump sum.
Okay.
So what we do is it's what I really enjoy. We go into businesses, have a look at their profit and loss, have a look at where the income is coming from, and work out, okay, hypothetically, if you lost that individual and you lost $1 million in GCI, what does that do for the business? Do you need $1 million or do you need 1.5? And then it's a matter of balancing that up with premiums and making sure it's affordable.
I just
what's the lump sum, though?
I just think everyone should have a look at this. If you're a business owner, you should consider it.
Is it a lump sum of what their annual average OTE would be?
Well,
is that what it is?
It could be basically, yes.
Yeah.
But it could be, we could walk in and they could say, okay, well, if we lose agent A, that's $1 million in gross revenue we're going to lose. But 30% of that would have went on costs. So now we're down to 700 that we need to replace. And I think agent B and C can replace 200 of it. So we probably only need 500,000 because that individual's not in the office. But the other thing is, quite often that individual's used to earning a certain amount of money. And if they're a director, they would assume the business will take care of them. Where does that money come from to take care of them if there's no commission coming in?
It's interesting. Is this just for real estate offices, or can anyone?
Any business.
Any business.
But we find real estate agents or any service business is most at risk, because a lot of the times you've got the principals that generate most of the revenue. They might have people underneath them or working with them, but the principal generally brings it in.
I didn't even know this was a service offering. That's so interesting.
So you need key man insurance.
I think even for your business, you should have a chat to me, because it's very important. I feel like so many, especially real estate agents, don't have key man insurance. They don't realise it. And I thought,
it sounds too good to be true. I didn't even know this was an option.
Yeah. It's a bad thing, so hopefully it never happens to people.
I've
seen it happen, unfortunately.
Happens a lot,
And the business can suffer so badly without it. And I've seen with people with key man insurance, and they're fine.
And I think the other issue is, people, when you, whether it's buy, sell or key man, it actually impacts what you're doing individually. So people might have cover personally, so they might have $2 million in cover personally. If you actually have your buy, sell agreement in place and the insurance to back it up, can actually reduce the cost of your insurance personally, because you know that, okay, 2 million, 3 million is coming from there. That means I don't need to pay for 2 million, 3 million personally. So
it's about taking a holistic view of what you have
and creating the awareness.
And most people have it maybe in their super, but they've never looked at it. And as a business owner, I think it's important.
What about the financial planning side, Nick? If I was, say, a young professional that, say, has a mortgage and then has a couple of $100,000 sort of floating around, what do I do? If I come to you, what advice would you give to someone in this market?
You're trying to get free advice.
Well, it was hypothetical, okay? Hypothetical. It's actually my friend. My friend's auntie.
Look, it's hard to give exact advice, but I'm glad you brought it up, because it's something we're passionate about, because we work with so many real estate agents. We see so many agents making amazing money at a young age, particularly the last couple of years, or drive nice cars or go to good restaurants. You don't need...
How much of that is on a credit card, though? The nice car and the nice restaurants. I'm just kidding. I love our agents.
But you're right. But it's not crazy, and you would know this better than I would, but to see a mid-20-year-old real estate agent earning $400,000 the last 2 years.
Yeah.
That's not crazy. So, what are you doing long term to protect that income? A lot of them might not have been through a down cycle, which, some of them might be experiencing that now.
For the first
It's not as good as it was 18 months ago. So
Yeah.
what have you done? Like, financial planning is about planning. So you're earning this money, put some away. How much can you afford to put away for the long term? How much can you afford to put away for that bad year that is going to come? It might not be a bad year, but it'll be a down year.
Or if something happens to you.
Or if something happens to you.
But are you advising, sorry, I should let you continue, but are you advising them on stocks or in the share market, or is it more sort of property related?
Everything.
Like, where is it?
Everything.
Okay.
Everything depending on what their goals and objectives are. So it could be an investment strategy for property. They want a more liquid investment. It could be stocks. It could be super, how to make sure you're minimising your tax debt through super. We've got a lot of agents that are buying into businesses.
Yeah.
So we do a lot of that work, getting them the funds for that, helping them out with distributions when they come, what to do with distributions and that sort of stuff.
Can I plug your...
Before you finish, sorry, I'm just really curious for my friend. Would you advise right now in this market, would you advise to put extra additional income, or if you've got, say, another lump sum of money, would you advise sort of more into the share market or the property market right now? Or do you not really give a biased approach? It's more just advisory?
No, we do give that advice, but it all comes back to, it's never about predicting markets. So what you'll find is whatever the objective of the individual is, that will determine where the money goes. We have some people that come to us and say, we only want to do property. Okay, well, let's get a property strategy, looking at cash flows, income, tax advantages, all that sort of stuff. But if someone wants a more liquid investment and doesn't want to take debt on, they only want to do a $200 a week investment, then it's shares. So both asset classes are great, and we don't predict that any are going to outperform any others. It's more about what do you want, and what does your next 2 to 10 years look like, and which asset class is going to fit in with your objectives.
Interesting.
Might be a good chance to plug your podcast as well.
Yes.
I need to listen to this podcast. I tell my friend to listen to this podcast.
The Numbers Game, 100 episodes in. With
100 episodes in.
Two amazing co-hosts as well.
Yeah, so Jason Robinson from Future Advisory, who are an accounting business, and business partner of mine, Marty Vidakovic. So
Marty's great.
He's great. He's the funny uncle. Used to be a comedian. That's why he's so good.
I did not know that.
People know that. Done
I can
some
see it now.
stand-up comedy these days. So it's kind of evolved. So I come in from a financial planning point of view, Jace from an accounting point of view, Marty from a finance point of view, and the jokes. It started as a more consumer-based around financial planning and basic things to set yourself up, but it's kind of evolved into small business. So we see it as a venting session. So we come in and look at all the challenges we've got in small business. We've all grown businesses from nothing to where they are now. So we have constant issues every day, good stories and bad. So we really just get together and talk about that. So we've got a massive SME following and a lot of consumers as well. We still talk about the investment side and whatnot.
It's a great podcast.
What was it called again?
The Numbers Game.
The Numbers Game. Great name.
Nick, thank you so much for coming down. We'll put your links on the show as well.
Cool.
I can't stress enough that real estate should contact Nick or someone equivalent to Nick to talk about key man insurance and look at your portfolio in terms of your risk assessment and also how important it is to work with a mortgage broker if you own a real estate agency. Yeah,
and the holistic solution to your finance. And we've got so much good content that we can share with agents on how to make it work based on our experience. So look at the solution, not just how can I get my purchaser money.
Awesome. And the Numbers Game.
And the Numbers Game.
And the financial planning.
Yes. I'm giving free advice today, I think.
I know. I'm going to get an invoice later on this afternoon. Thank you so much, Nick.
Worries. Thanks for having me.
Such a pleasure having you on, and we'll see you on the next episode of Real Estate Renovators.
Thanks.